On est dans un contexte monétaire qui est nettement plus favorable qu'en 2023-2024. Après le choc des hausses rapides des taux en 2022-2023, les cycles des baisses amorcés par la Banque du Canada en juin 2024 ont profondément changé le climat. Cette détente monétaire a vraiment redonné de l'oxygène au marché. Ça a permis aux acheteurs d'améliorer leur capacité d'emprunt, aux propriétaires d'améliorer leurs conditions de renouvellement et refinancement, et aux promoteurs au niveau des nouvelles constructions, même si les coûts de construction demeurent élevés. On est passé d'un environnement restrictif et défensif à un contexte qui est beaucoup plus stable et prévisible. Je dirais également que les conditions de financement sont plus accessibles, mais encore sélectives pour les banques et les prêteurs traditionnels. Le marché immobilier québécois demeure résilient, mais à deux vitesses. Le Québec reste l'une des provinces les plus dynamiques au niveau des mises en chantier et de la croissance démographique, mais l'abordabilité demeure un frein, les prix sont élevés et les coûts de construction sont persistants, ce qui fait en sorte que les prêteurs continuent de financer, mais exigent des projets mieux structurés, mieux capitalisés et plus réalistes. Nous sommes dans une phase de réinitialisation du cycle où le financement redevient un levier stratégique plutôt qu'un obstacle. We've seen a strong rebound in mortgage volumes driven by refinancing. In Quebec, mortgage registrations rose more than 20% in 2025. That goal is not primarily purchase-driven, but refinancing-driven. The expectation is that this trend will moderate over time as the refinancing backlog is absorbed. However, active balance sheet optimization is likely to remain common among investors and developers. The persistent trend, I would say, is refinancing will continue as a strategic tool. We're going to see increased differentiation by asset class and location. Currently, financing conditions vary very sharply between Montreal and secondary regions, between purpose-built rentals and other asset classes, between stabilized properties versus value-add properties. Lenders heavily favor rental and multi-unit assets, projects supported by demographic growth, and properties aligned with housing supply objective. The persistent trend here, I would say, is that financing becomes less market-wide and more asset-specific. Government and policy support as a financing catalyst, this would be a medium to long-term trend, in my view. Currently, programs such as Quebec Housing's SHQ and PFH frameworks, they continue to support affordable housing, nonprofit and mixed income projects, rental supply expansion. The expectation is that given structural housing shortages, policy-linked financing will remain relevant and private lenders will increasingly co-lend alongside with public or para-public programs. I would say that the next few years are likely to be defined by selective growth, more sophisticated capital structure, and a continued segmentation between prime and non-prime borrowers. I think we're seeing a shift from banks being capital providers to a structuring partner. By 2030, banks will no longer primarily compete on headline pricing or standardized loan products. Their value will increasingly lie with how they allocate risk, structure capital, and integrate with other sources of financing. Key shifts. Banks will become central players in hybrid capital stacks. In practice, what this means, bank will underwrite exit certainty, not just entry metrics. The question won't be, can we finance this, but where does the asset lie in the capital continuum? I would also say that relationship banking will matter more than balance sheet lending. Banks that behave strategically versus transactionally will deepen share of wallet and grow. At Laurentian Bank, we're a specialist bank, not a generalist one. It's public knowledge that we're on the path to accelerate our specialty commercial bank strategy, and real estate financing is definitely a key element of that strategy. We have deep expertise and specialized teams of professionals in Quebec and in all Canadian major markets. We have intimate knowledge of regional dynamics, regulatory nuances, asset class specific risks. We accompany our customers through the full life cycle of acquiring, constructing, and refinancing residential, industrial, and commercial projects. We act and orchestrate between conventional, CMHC, and transitional capital. One of Laurentian's strongest strategic levers is to position itself as the bank that helps client move across financing phases. Going forward, the most trusted banks won't be those with the lowest rates today, but those that reduce refinancing risk, shorten decision cycles, and protect client equity over multiple market cycles. What does this mean practically for Laurentian Bank? It means we'll continue to lend across cycles, not just peaks, and continue to grow. We think in terms of portfolio, not single transactions. We integrate with CMHC, private credit, and public programs. We have the ability to guide our customers across financing cycles, not just fund them at a single point in time. We focus on our people and build strategic customer relationships.